Hello, welcome to this tutorial on creating basic financial statements. I have the question over here and then I'll be working over here. This tutorial is designed to help you understand basic financial statements and how to go about attacking these questions. So the first statement you always need to start with is the income statement. And the income statement always focuses on a period of time. So in this case, it's for the month of July. So we want to know what's gone on in the month of July that impacts the profitability of the company. Profitability hinges on revenues and expenses. So revenues are the value of goods or services you provided to your customer, and expenses are the things that you've used up while serving your customers. So in this case, we're a courier company, so it's a service. So what services have we provided and charged to our customers? So I'm going to look for that number in the question. And one tip is, while you're doing these questions, all of these numbers within the questions are only going to be used once. So I am going to cross things out as I use them. So service revenue is the first thing. We'll pop this into my statement. And take it out of the question because I don't want to be tempted to try and put that someplace else, because I know revenues, they're only reported on your income statement. Next, we have expenses. So if we look at expenses, I see salaries expense. So again, expenses are what you've used up while providing your goods or services, and I have obviously used up $4,000 of my employees' time during this month. All right, so now total up those expenses, and you notice I have my total revenues and total expenses in one column, so it's a straight shot to do a calculation here. You always do calculation in terms of the columns, so all of these are added up, and we'll bring the total out here. There's going to be a calculation between these numbers. I've got my underline here denoting a calculation is being made, and wow, we can get our net income of $7,900. Net income or profit, because this statement is all about profitability. All right, our next statement is the statement of retained earnings. So again, this is for a time period. What's gone on with our retained earnings for the month of July? So in this particular problem, the company just started in July, so the company has not been able to retain any earnings into the company prior to July because it hasn't existed. So this number is 0 to start at the very beginning. For most companies that have been in business for a long time, you definitely have a number here. So this is all about the shareholders of the company, the owners. Has the company been working on behalf of the shareholders? So yes, it has. So first thing we're going to do is add the net income earned for the month. So because it was for the month of July, and the income earned for the month of July is that number comes down, gets popped in right there. Now, has any of this income been distributed to the shareholders? Absolutely is, and it's in the form of dividends. So and $2,000. So I got that number right over here from the question. So dividends, we can take that baby out too because I just used it. And so during the month we added net income but subtracted out dividends. So here at the end of the month, July 31st, we've got $5,900 in retained earnings. Now we'll move on to the balance sheet. Balance sheet, you always do the balance sheet third. So the balance sheet's a little bit different. It's for a specific date. So we are looking at what we have, our assets, on July 31st, what we owe in terms of those assets, like do we owe anybody for the assets, and what the shareholders have as a stake in the assets. So what the company has, is it owned by the actual owners, or do they still owe for some of those assets? So assets are kind of funny. They need to be ordered in the order of liquidity. The order of liquidity is whatever will turn to cash or get used up first. So when we look at our question over here, cash is already cash, so that's what gets listed first. And from our question, it is $8,100. Boom, right there. That's what we have at the end of the month. That's what we're reporting at the end of the month. So there we go. The other asset is equipment. It's something the company has. They got lots of equipment. So hot dog total assets added up $44,000, $44,100. Liabilities. Liabilities are what you owe. Any account that ends with the word payable is going to be a liability. So we have accounts payable, $3,200. They probably still owe one of their suppliers for some of that equipment. So finally, there are two components to equity. One is common shares. That's the amount that shareholders have actually invested into the company. So they've invested either $35,000 or $35,000 worth of other assets like equipment. And last but not least, how the company has been working on behalf of the shareholders, so our retained earnings. And we've calculated that number up here, so I'm just going to pop it in. So our total shareholders' equity, comprised of those two components here. If we look at our liabilities, add it to our equity, we have total liabilities in shareholders' equity, which is exactly the same number as our assets. Woohoo! And our balance sheet balances. So part of those assets were acquired through borrowing. Part of those assets were acquired from the shareholder, basically. Last but not least, we have a statement of cash flow. So in this course, we're not going to really look at constructing the statement of cash flow, but it is a very, very important statement. It tells shareholders or whoever cares about the company what's gone on with cash, because cash is the most important asset of any company. It helps you get things done. So what you really need to know is it is for a time period. We're looking at what's gone on with our cash for the month of July in this case, how the company has got cash and where they have spent cash. So the statement of cash flows is divided into three main components. Cash flows from operating activities. So day-to-day operating activities, did they get money in from that? And yes, they did. They got $11,100 just from their day-to-day operations. Next part of the cash flow statement is cash flows from investing activities. This is usually investing in big assets, big things that they've purchased. So that took a lot of cash, buying equipment. Lastly, we have cash flows from financing activities. This is borrowing or equity, and cash went in when they issued shares, and it went out when they paid dividends. So that's the net increase of those investing activities in this case. So if you add those three categories up, you see that cash increased by $8,100. We started out with nothing in the bank because the company just started in July. So it increased by $8,100. That's what we have in the bank. And lo and behold, that number, $8,100, is the same number that we report at the end of the month here on our balance sheet. Hope you enjoyed this tutorial. Thanks and have a great day.